the green. Our market master of the day is with us here in our studios. Sridhar Sivaram is Investment Director at Enam Holdings. Sridhar, great to have you with us here on the program.
Thanks for inviting me.
Thanks very much. How are you feeling about the market, Sridhar, first up? Near to medium term?
Nothing much has changed. Our view is still cautious, given the macro is the bigger challenge, not only for India, I think more globally than India. We are seeing some improvement in the macro, but our view is for 6 months, maybe another 3-4 months, the dust will settle. We'll get more clarity on how Fed is moving, how RBI is looking at inflation. We don't see US inflation below 2% in another 12 months, and Indian inflation below 4% for another 12 months. So those are the two benchmarks that you have to look at. So basically you're talking of
but
higher.
4 plus minus 2, right? So
yeah, so it has to go below 4, right? For them to cut.
For them
so you're talking of higher for longer, right? So the rates are, so you can't cut if it's still above 4.
I was saying holding here.
Of course, you can hold, but you're still talking of higher rates.
Yeah.
Okay. So those are the challenges. Typically, when rates are higher, they're not great for for global markets. Yeah. So we'll see how it plays out. I think you have to look at more stock specific. I mean, that's how we are seeing the markets.
Okay, so that's our cue, right, to take it forward. Sridhar, hi, good morning.
Good morning.
I have so many questions to ask you, but I want to ask you the comment that just came in from HCL Tech a while back.
Sure.
Where he said that hiring requirements are coming down because of lower attrition and lower growth, and AI tools are one of the factors in improving productivity. And this is a discussion we were having as to how AI disruption is taking away a lot of jobs, especially in the tech sector.
Yeah.
Hopefully not ours, but you never know. How are you as an investor approaching all of that?
Yeah, so I think on the tech sector itself, our broad view was that given the slowdown in US and Europe, it is better to be a bit cautious, underweight in the IT sector. That's what I had mentioned, that I will wait for the guidance for the coming year. We haven't seen great guidance as far as tech sector is concerned. Some companies have done better than the others, but generally I would say it's softer than what I would have expected. But I think the bigger challenge that we've been debating internally also for a while is that how does this whole generative AI disrupt various industries, and one of the industries that we think could get disrupted is the Indian software industry, and more because of the ease of coding. So coding is becoming very easy if you are using a generative tool, and just recently Amazon also has jumped into this, and they've launched something called a Code Whisper, which is basically a tool for coders to do their coding, and it becomes so much easier. So what I have read, what I have spoken to people is that what 30 people could do now using a generative AI, maybe 1% or 2%, they could do much faster. How does this play out? It improves productivity, but you require so many lesser people. And one of the advantages for India as an IT is that we have a lot of IT professionals, you have a lot of engineers. And sadly, the entry-level salary for them is closer to 4.5 lakhs. Even today, if somebody joins TCS or Infosys, they get not more than 4 lakhs per year. I mean, there's a huge labor arbitrage which India enjoys. I think this is where the disruption is happening, and I think companies which are able to disrupt themselves will possibly come out as winner, and companies which are slow in looking at what is happening on this AI space may lose out. So this is a space that has to be watched very carefully. I think there's disruption already going on based on whatever I hear.
As an investor, what do you do here? If you already have investments in, say, an Infosys or TCS, do you sort of churn out, or do you think it's a good thing because if they have to hire lesser people, the cost will go down?
Yeah, so I think there are two ways to it. So if you look at Indian software industry, they're based on per man-hour billing. So if you're using lesser number of people, that means your billing is going to be lesser, your productivity is going to be better. On the flip side, if my client knows I'm using AI, will they be giving me the same billing rate? I think the answer is no. I don't know the exact how much reduction it will be. But I think it's too early to say. But I think something is happening here because so many companies have jumped into this generative AI, especially for coding, because it becomes so much easier to code. Almost 40 to 50% of Indian software industry employees are in the 1 to 3 year band in terms of experience. So you have a large part of the Indian software industry who are basically doing very low-end work. Maybe that gets disrupted. How this impacts the software industry. When I look at the Infosys guidance of 4 to 7%, didn't add up. And you look at the number of software employees on a quarter-on-quarter basis, it is down by 5,000. So something is not adding up here. Maybe, as some companies have already indicated, that productivity will go up. They'll need lesser number of people. How this has an impact on top line and profitability, only time will say. I'll continue to be underweight.
All right. Hi, Sridhar. Good speaking to you as always. Sridhar, I had this query to you about asset allocation right now.
Sure.
You have always told us that some allocation to gold is a must, right?
Yeah.
But from now on, for someone who's going to be earning for the next, say, 20 years or so, and they want to deploy fresh money, what should be the split up between equity in some form, either stocks, SIP, as well as gold? What should the asset allocation be from here on?
So, given that financial investors allocate so little to gold, my general advice is at least first come to 10%.
Okay, 10%.
You can look at it afterwards. So this is an interesting number that, not too many people know. In the last 20 years, gold has had only 3 down years, which is 3 negative years in the last 20 years.
Yes.
So it's been a very stable, return asset class, despite the fact that people just don't want to invest, especially financial investors don't want to invest. As I always say, that it's a hedge against the currency. People just don't realize that our currency continues to depreciate 3 to 4%, and this is the best hedge against the currency. So I would say at least start at 10%, and based on your age, I mean, the younger you are, the higher should be your equity allocation. That's how generally it goes.
Yes.
Sridhar, you still very bearish on life insurance as a space?
Yes, I am. And I can
More
tell
bearish
you,
or the...
No, so I'll tell you. So look at what the government has been doing. Look at what happened to the debt mutual funds. I mean, they're plugging every loophole as far as tax arbitrage is concerned. So if you ask me, there is only one instrument where tax arbitrage is still there, which is 5 lakhs for a par or non-par instrument in life insurance and a 2.5 lakhs for ULIP. Now, I know that the mutual fund is up in arms with the finance ministry that a mutual fund doesn't get any tax-free benefits, whereas a ULIP investor still gets a 2.5 lakh tax-free benefit per year. I think it's only a question of time that this 7.5 lakhs for life insurance also goes. I don't know whether it's next year or year after that. If these companies are able to change their business model to a model which is more selling protection and not tax-free savings product, I think I'm happy to look at it. I mean, different people have different views. My view is that they're still using tax arbitrage. They're not really selling insurance.
Okay, fair enough. I just had one follow-up question to the IT, argument, because we have the management of Cyient that's joining us in just a while from now as well.
Sure.
And, Cyient is a company that is getting into new growth areas, whether it's automobiles, semiconductors, high-tech, medical. Okay, growth is slowing down in these areas because of the challenges globally, but there are companies that are, making that shift.
I agree
do you
with
separate the men from the boys?
Yeah, so I think you have to look at, it's like pharma. So if you look at, say, pharma companies today, if you look at just the Nifty itself, you have a company which is in the top 3 performer and you have a company which is in the bottom 3 performer. Both are in the pharma industry. So I think it's becoming very stock specific that people who are able to disrupt themselves and adapt to changes faster will be winners. And I think that's where the skill of the fund manager will come. It's not easy now to say, I'll just buy IT and you just buy the top 3-4 IT companies and sit. Maybe the disruption is too fast for people to, take that sort of view. This is my personal view. I could be totally wrong, but this is how I'm reading what is happening. And changes are happening every day. So obviously, it's quite difficult to adapt to the changes.
Sridhar, what about defense? That sector has come to the limelight. There's a lot of focus out there, a lot of expenditure. And some of these stocks that are listed as well, they have come to life. Just to give an example, Bharat Dynamics, it came at around 300, 350 rupees IPO. No one was really interested. I think the stock corrected 25%. From there, it's up nearly around 4 times. What's your view on the defense space from here on? Do you think that's still a space that can do well?
Yeah, we are quite bullish on the defense space. I think the government spending on defense is continuing to increase. Also, the government's focus on the offset clauses, which is creating more companies, more employment, many of these foreign companies are now forced to produce 30% at least locally, which is creating opportunities for many companies in India. So broadly, I would say we are quite bullish on the defense space. We like that space, especially given that manufacturing is also getting some sort of a boost because of the Make in India.
Sridhar, just to come back to that AI point,
Sure.
right? I mean, and we're talking about just large language models, AI, chat GPT, so we're not talking about general intelligence, right? AGI, which is like the ultimate thing. Do you think markets go into these phases of overestimating the impact of something new which comes up, right?
Yeah.
We had this, what was it, the metaverse, which took the world by storm, and nobody talks about it anymore. I don't believe this is one of those, but is there a chance that we are kind of overestimating the impact of what is...
It's possible, Prashant. It's too early to say this is what I said. But given the investments that are going in and as I said, Amazon was not there and they've launched an AI tool specifically for coders. It's called Code Whisper. So obviously something is happening. So I think it becomes easier where there is a clear logic and these AI tools are faster in developing something like that. So I think coding, you broadly know there's a logic, this is how you have to do. It's become so easy that you don't even need to know the coding language. You can just give your general view.
Write
a code on this.
Python and it writes it
and everything comes down. And then all you need to do is I'm not a coder, so I'm not an expert on this. But speaking to people, what I've understood is that it's become very easy. And this is where the disruption is, which is at the lower end to start with. And people who have a lot of work on the lower end will see some disruption. People who are at the higher end will see lesser disruption. So that's how I'll put it.
I think it's the way you prompt, right? The prompts that you use, and that's the way you work on ChatGPT, and that's the right model.
So now levels above ChatGPT have come, which is the
things are changing every day. But thank you so much, Sridhar, for joining in,
Yes.
and have a great day, have a good weekend. Let's move on.